How to get a hard money loan for a flip. Paul Maguire here. I've done hundreds of flips and got hard money loan for just about all of them. So I'm going to give you the 5 pointers on getting a hard money loan for your flip and hopefully save you a lot of time and help you to acquire one or multiple properties for fixing and flipping and making some money. If you're just beginning or you're a seasoned investor, you know that money is the key to the kingdom. Without any money, it's pretty hard to get the property. So hard money loans are often actually easier money loans, in my opinion. They may be a little bit more expensive, but they're a lot less brain damage to get. So how to get a hard money loan for a flip really comes down to 5 essential things. Number 1, the property, okay? The property needs to have some upside after being fixed. That's called the ARV, after repaired value. Then we have the current value. The current value and the ARV are done by an appraisal, which is ordered by the hard money company, which will show what it's worth today. And then you're going to provide a budget of what repairs you're going to do. And then the appraisal will give an estimate of what it will be worth after these repairs. Here's a typical example. I bought a home for $400,000. The ARV was $570. So I got $170 to work with. My budget was kitchen, $5,000 for cabinets, $3,000 for countertops, $2,000 for appliances. It's about $10,000 for the kitchen. Painting, $4,000 for interior, $4,000 for exterior, another $8,000. Flooring, $5,000 for flooring. Laminate, carpet, tile, whatever you're gonna do. Roofing, just needed some repairs, $2,500 for roofing repairs. Mechanical, everything was fine in the mechanical, $2,500 for mechanical, just to repair it, fix it, anything it needs, right? Windows, they needed new windows. I'm ordering these windows from either Home Depot or somebody else, and I'm installing them with my guys. So maybe windows are $6,000, and on it goes, right? So that's what's on the budget. Those are the type of things. Bathroom 1, primary, $3,000 remodel the bathroom. Bathroom 2, secondary, $3,000 remodel the secondary bathroom. Half bath, there isn't one, but maybe that's $1,500, right? Landscaping, right? So maybe I'm gonna spend a couple thousand in landscaping, maybe some white rocks with some black bark with some plants, tear out ugly lawn, or maybe put in new sod, fix the sprinkler system, whatever you're gonna do. Concrete driveway's cracked, maybe $2,000 to fix it, or $5,000 to tear it out and put it back in. New garage door, $15,000, $2,000. These are actual numbers. These is like what I'm spending, okay? Some sheetrock repair. Rough electrical, maybe $1,000, $1,500 if, put in some GFIs, get the thing checked out by an electrician, change some breakers if they need it. Plumbing, some light plumbing, whatever it needs. Sewer lateral, replace it, $8,000, inspect it, $1,000 if it's required. Contingency, $3,000. So maybe the whole budget is $40,000, $50,000, okay? So buy the house for $400 with a hard money loan. I give them a budget for, say, $40,000, $50,000 to fix it, call it $50,000. So I'm into a $450,000. I can sell it for $570,000. So they see, okay, $400,000, we'll lend them 90% of that in this scenario I'm telling you, maybe 85, maybe 80, depends. So they'll lend me $360,000. So I gotta come up with $40,000 down plus some closing costs, right? If you write the contract right, you could have the seller pay part of your closing costs, maybe give them $410,000, get $10,000 back in a credit instead of paying $400,000 and not getting a credit, having to come up with the $10,000 out of your pocket. You follow me? So now I'm into the house. I bought it for $4,000. I got a $360,000 loan, and they're going to give me, $40,000 in repairs. So at the end of the day, I've got the $360,000. Out of the $50,000, they'll give me 80% of that. So they give me $40,000. So I got $400,000, right? I got the house fixed. I got a $400,000 loan. I sell it for $570,000. I got real estate costs, all that, $530,000. So basically, I got 100 and change in profit, right? Maybe 70, maybe 80. Maybe I got some carrying costs. Maybe I went over the budget, but you get the idea, okay? There's money there, right? For you to get that loan, it really requires that appraisal, the budget, and what the after repaired value is and what the market will support. The second thing you need to get a hard money loan is you need some financials. You're gonna need some bank statements. They're gonna pull your credit, most of them, and you're gonna need a little bit of a story, like who are you, what have you done, what's your track record. If you're brand new, they might not give you as much loan to value because they're not comfortable with you yet. But as you do some deals, they may give you more. Who's the borrower? Okay. Is it you? Is it you and somebody else? Is it an LLC? All right. They're going to need to know if it's an LLC, they'll need your corporate documents, your basically what state you're in, who's the LLC members, and what your operating statement looks like, as well as your history of time. So you're gonna have to have your operating agreement, your bylaws of your LLC, and all your legal documents that you filed so they can read them and see, if this happens, if that happens, who's liable, who's not, et cetera, et cetera. Once you have all that stuff to them, they have the property, they're gonna need the real estate contract, any addendums, who the title company is, who your insurance is gonna be with, and with all those documents, they need all that to get a loan. And then they're just gonna look at the deal and say yes or no. That's called the package, okay? The contract, the appraisal, your credit, your financials, a little bit about you, who's buying it, what's the entity documents, etc. That's called a package, okay? It's like a package of stuff. And they're gonna either do it themselves, or if it's a broker, they may shop it and see what they can get you in terms of a loan. Your private money loans, you're gonna pay anywhere from 1 point to 5 points. I'd say the average is 2 to 2.5. If you use a broker, it might be a little higher. Your interest rates could be, and that's just an example, okay? It could be anywhere. I mean, there's private money loans that could be 10 points, all right? It just depends. And then your interest rate is typically 2 to 3% over whatever the average rate is today. So if the average rate today is 6 to 7, you might be like 8, 9, 10, okay? That's what to expect. Most private money loans are gonna be interest only, all right? So you only have to pay the interest, and most of them are 6, 12, 18 months. I would recommend you go no less than 12, and you have a built-in 6-month extension for a 0.5 point to 1 point fee. 1 point meaning 1% of the loan, just to cover you in case things happen. I had a contractor, he quit, couldn't get supplies, market changed, my partner and I are fighting, there's no materials available, we're waiting an extra 2 months for our cabinets, somebody ran into the side of the house. I mean, I had a weird story. I had a drunk driver ran into a building I owned. It was a fourplex, but it was a two-bedroom building. And the guy hit the thing so fast and hit the building so hard, thank goodness nobody was living in it at the moment, he knocked it off the foundation. So he got red tagged by the city, we had to tear it down, okay? So now that loan is past the 12 months, but I got that 6-month extension. If I didn't, I could have a problem. So things happen, great to have a built-in extension, all right? Always have more time if you can get it. And that's basically what you need for a hard money loan. If you like this, subscribe. Tell me you like it. Tell me your comments. And the last thing I'll tell you about hard money loans is hard money loans, often called easy money loans in my world, they are other people's money. OPM, okay? And remember the most important thing about OPM, other people's money. Eventually, the OP want their M back, and you got to pay it back, okay? And that's an important point. So make sure you have some reserves in cash. Make sure you're able to make the payments while you're fixing this thing up. If you only got 2 months, 3 months worth of payments and this thing doesn't sell right away, or the market changes, or you have some options, right? You could potentially rent it, refinance it, or you could sell it for cheaper and just get rid of it. But make sure you pay people back, because what happens is when you get a lender and you're using them and you build a good track record with them, and you're buying houses, you're fixing them, and you're selling them, and you're paying them off, and you're making your payments, that relationship is golden, and it could help you make a lot of money. And listen, I don't make money on every house. I've lost money on houses. I think most people have that do this. Nobody wins 100% of the time, but you win most of the time. And my suggestion to most of you trying to get a private money loan, start with a property, get through the process, learn how to do it, and then go on to get more. All right, I'm Paul Maguire. I thank you for watching this today. And on the next video, we're going to talk some more about financing and real estate and building wealth, and having a good time doing it.